Hi guys, welcome to today's session. I'm going to give everybody a minute to join, and I've just realized I haven't pinged the Discord, so bear with me for 2 seconds while I throw the link to today's session into the Discord. Wrong channel. Live for today's session. And the link is good to go. Okay, welcome guys, welcome. I'm just giving everybody a moment to join. I forgot to send the link into the Discord, so people might be a few minutes late. How are we doing, boys? It's good to have you back, dude. I'm thinking of doing something slightly different today. I've been having a lot of questions recently about XAQP, okay, which is my portfolio. For the guys who come to these sessions frequently, every week, you will know this is my portfolio. You will know it's a basket of strategies that I built myself over the past sort of 6 to 8 months. The portfolio has been evolving. I sit down, I do monthly reviews, quarterly reviews. I did a 6-month review in, I think it was last month, but I didn't do too much for the 6-month review just because I didn't want to make any sudden changes. However, I'm doing a proper quarterly review now of Q3 trading. It's a couple of weeks late. I should have done it last week or the week before. No, how many weeks are we in? Yeah, so I'm about 2 weeks late on my Q3 review. And because a lot of people are asking me how I built XAQP, how I created my strategies, would I be open to doing sessions on that? Tail, hi handsome, how we doing, dude? Long time no speak. Taylor and I, that's actually a lie. Taylor and I had a call this morning, so it's good to chat to you again, dude. This morning, this afternoon, one of the two. XAQP, yeah, that's the one. So I thought today, as I'm mid Q3 review, I thought, let's do it together, right? Let me kind of walk you through the things that I look for and the things that I do. A lot of my strategies are already built, so there's no real kind of going in and doing major changes. But what I am doing at the minute is refining them based on things that I've experienced over the past quarter. So it's been a great quarter. Performance-wise, July, August, September, all been positive months. September was a really, really solid month for XAQP. However, some things have happened in the past 3 months, specifically this drawdown here. Some things have happened over the past 3 months that I'm not necessarily happy with. Are you only doing XAQP or others as well? So I'm only doing a deep dive review into XAQP. My other accounts are more test accounts. However, BYXB, which is this Darwin, BYXB directly benefits for whatever I do to XAQP because it takes the same trades. So for those that aren't aware, XAQP is my main portfolio. It's a multi-strat fund operating with 27 different strategies. BYXB takes all of the same positions at the same risk level. However, I also have a carry trade grid system running on BYXB as well. So the returns are completely different. The risk is completely different. Yes, it takes a lot of the same trades, of course, because it trades the same as XAQP. However, there's usually I don't know, somewhere between 30 to 40 trades running on BYXB. I try and churn out swap fees. So, for example, I've been sat in pound Swissy longs for weeks now. Yes, the positions are offside. They've earned a hell of a lot in that time in swap fees as kind of a carry trade system. And then I will just wait for that system to play out. Of course, that is naturally higher risk. But to answer Taylor's question, BYXB is automatically benefited by the changes I make at XAQP level. Great question. I'm curious, at which point did Darwin change from 3-letter tickers to 4 just because you ran out? So we would have run out eventually. I can't remember what the exact number is. I think there's a lot. 20. I'm not even going to do the calculation, but the reason we changed to 4 was for Darwinex 0. So any Darwinex tickers are three-letter tickers. Any Darwinex 0 tickers are 4-letter tickers. So that's all that means. However, for traders that have migrated from 0 to classic, they keep their 4-letter ticker. So it's not always like you see a 4-letter ticker and you go, oh, it's a 0 Darwin. Of course, it starts as a 0 Darwin, but you can upgrade. Well, I don't want to say upgrade. You can change. And then to go back to your question, Tail, LVF said, I haven't changed any of the strategies on this. To be honest, I will probably get rid of this account at some point. Basically, the way I set LVFZ up is it takes all of the same trades as XAQP does, but it's weighted more based on performance. Okay, so XAQP, every single strategy is weighted based on their risk. So every strategy is kind of watered down to have a max historical drawdown of 1%. It's not perfect, I know, but that's how I have it. So all sort of systems are running with the same historical risk level. LVFZ, I changed that up slightly, and instead I looked at some risk metrics, and whichever strategies provided the highest risk-adjusted metrics, they had a higher allocation in the portfolio. It was more of a test than anything, and like I say, I don't think that I'll keep this Darwin, but I wanted to test a few different things out, and it worked well. Or it works well when the portfolio is doing really well, but then when the portfolio has a bit of a bad patch, it becomes really bad, because if you take a couple of losing trades on the strategies that have a higher weighting, of course, there's a lot more ground to recover. So you can see that they are actually really highly correlated. So 0.87, which is another reason why I may get rid of LVFZ, because I don't ever want it to take the shine off of XAQP. But you can see BYXB is only a 0.57. I mean, this is to LVFZ, not to XAQP. But the carry trade system makes it really, really uncorrelated. But I just have to be careful of these two Darwins. So anyway, welcome, guys, to the people who've been joining over the past few minutes. So I'm going to explain what we're going to do today, because we're doing something that I haven't done before. But a lot of you guys have been asking me to kind of go through some of my processes that I have with XAQP. This is my multi-strat portfolio. For those that are unaware, it runs across 27 different strategies across different assets, including US indices, commodities, or precious metals, I should say, and a load of different FX strategies as well. I have breakout systems, trend following systems, mean reversion systems. And at the moment, I'm currently undergoing a Q3 review. So essentially what I'm doing is looking at more so the execution or the live execution performance over the past 3 months, and kind of the strategy as a whole since they've been live since back in May, as opposed to the strategy logic and, you know, completely overhauling them. So I'll explain something that I've been doing today on a silver strategy, because I think it's super important, because that is a strategy that I'm potentially looking to overhaul. So for the most part, let me bring up my Notion. So a lot of the deep testing has already been done on these systems, so I'm not going to be doing them again. This is a very base level overview of all the strategies that I have running, and you can see their drawdowns are all pretty much capped around 1% or so, and their returns over the past 8-year period are all between 3% to a couple of outliers at about 10%. Now, it's important these are back tested with a little bit of live data in there as well. So for the systems that I've rerun since they've gone live, of course, I can compare backtest to live data, and so far it has been fine. I haven't really had many issues with overfitting or anything like that, which is great. And the reason for that is my systems are all super simple, which I'll show you in a moment. There's no complex logic in what I do at a single strategy level, and I don't overfill the strategies with code or data or anything that it needs to look for before it executes. The issue has been in the past 3 months, which I'm really grateful for, even though it's a hard lesson to learn, and it's kind of out of my control anyway. So silver recently has been hitting new all-time highs, as gold has. The problem is with silver is liquidity providers recently have been increasing spread. Damn, your Notion is slick. I appreciate that. I've been using Notion for a long time. Liquidity providers have been providing pretty poor feeds for silver. I don't know the exact reason why, but essentially some LPs have turned off their feeds for silver at important moments when it's gone past all-time highs. Some LPs have blown out spreads. And I've actually been burned by that in the past couple of months. So these two systems, you can see these XAG USD systems are my silver strategies, and they're both turned off at the moment. The reason I've turned them off is because I got burnt on them and I needed to figure out why it was happening. Now, this is a breakout strategy that basically trades based off yesterday's candle. Okay. Sorry, not yesterday's candle. This takes a 100-day period and it trades off the high or the low of that 100-day period. Now, as you can see, it's not a high risk to reward rate. A high risk to reward. What can't I speak? A high risk to reward ratio. It trades 0.45R on the breakout, so it is looking for small moves. Has a fantastic win rate of 80%. All great. However, what happened recently was this massive drop off here. And there's also a big one down here. So I've rerun some tests, changed some stuff in the code to try and highlight these issues. Okay, so you can see the charts are pretty similar. I made a couple of adjustments just to try and get these issues to show up. And what I found was, so this is where the LPs blew out spread, which caused me to get entered into a trade and hit stop simultaneously, meaning that I took, it was like 2.5 times the actual loss it should have been. And then over here, it took me a little bit more time to figure out what was going on there. So I had to analyze the individual trades. I'll answer your question in a second, Tal. And what I realized was, okay, this is due to swap fees. Okay, so this strategy was in a short, held it for a couple of days because it hadn't hit target. And then, I ended up paying, it ended up taking a stop loss, but it doubled the stop on 2 or 3 trades because of all the swaps. Okay, because silver or metals at the minute, or for the past few years, have had a negative carry or a negative swap. And therefore, when I close a trade or when the strategy closed a trade, I also closed out with a huge loss from swap fees. So that got me thinking, okay, this system needs a bit of an overhaul, because whilst the original testing and the original conditions were fantastic and it actually performed really, really well for me, this has probably been one of the best performers since I set it to go live. I realized there's work to do to make it a little bit more robust. So something that I've been playing around with earlier on today, if I bring my MetaTrader terminal over, see, I've been doing some testing on XAG. So this is the same strategy. Now, if I bring the Notion back over, you can see how different the strategy curves look, or the equity curves look. Okay. And there's a few different changes that I've made. I need to move that back across. How we doing, Rob? Getting ahead with Dr. Ojo. Thank you for sharing these. It's like giving us an insight into your innovative world. I appreciate it, dude. That's why I'm here. I thought I'm kind of in the thick of this quarterly review now, and a lot of people have been asking to kind of have an insight into what I do for XAQP. So I thought perfect opportunity just to showcase to you guys some of the things that I look for. Tal said, I'm sorry that it's not a question related to your strategy, but the option on Darwinex to move your interactive brokers account to Darwinex, does that mean you stop trading on interactive brokers entirely? Yes. No. You can move your interactive broker account to execute through Darwinex. So you would still execute, or so you would still trade through interactive brokers, but you would get a Darwin created. I think it's what SQZ does. Correct. Yeah. Can you please share how you manage these multiple strategies? I mean, aren't you trading with via MT5? Is this 27 different EAs placed on different currency and time frames? I read your LinkedIn post. I really appreciate you reading the LinkedIn post. And yes, it is. I'll bring up the actual master terminal. So this is on a VPS. Pleasure, Tal. So this is on a VPS. So here's my master terminal. So here's all the 27 strategies. You can see the XAG ones are turned off right now. But we've got different time frames, different assets, and different strategies all on there right now. In a couple of trades, long NASDAQ, been long NASDAQ since either this morning or last night, I can't remember, and long on dollar yen also. But anyway, back to the strategy. Rob, how did you code the EA? Can you code? I will get onto that in a moment. I will show you exactly how I do it. I can code, but I'm a lazy coder. I use AI. I also use no code building block softwares, which I can show you in a moment. Now, I made a couple of changes to this. So it's taking the same trades, but what I found was, well, there was a couple of issues, right? How are we doing, BT Capital? Pleasure to have you here. So the first issue was I need to not get killed on swap fees. So I need to be thinking of ways to cut trades. Okay, now, and because it's a negative risk to reward strategy, I was thinking, well, I'm pretty much out of trades for the most part within the same day, usually a few hours. So to implement something to cut trades earlier shouldn't be an issue. The only issue in that perspective is the outliers. Okay, because 90% of the time I'm out of the trade within an hour or two, maybe a few hours at most. But that 10% of the time, or maybe even less, maybe 5, 3, 2% of the time, where silver might enter me short and then range for a week within my stop and my target, but I'm going to be paying swap fees on that and my costs are going to go really, really high. That can really, really damage my bottom line. And it's not something that I can account for. So with that in mind, if we take a look at the equity curve that I've shown you, this here, now it was already kind of in a period of stagnation or drawdown anyway. That would really hurt on the day that it happened. Okay, the days that that trade had closed out. Now you can see for the most part, this doesn't happen. It's only really happened once. There's a couple of times where it's happened again, but nothing that major. But that one major event can wipe out months, weeks, maybe even a year's worth of gains. When we're talking that these strategies, they might do 0.5% per year or 1% per year, that is really important. I can't have anything unforeseen kind of affecting my bottom line. So we had this issue that we needed to fix, which was the carry trade or the negative swaps. We needed to close out of those. And we also had this issue where spreads got blown out, liquidity was thin, and I was in and out in seconds and just got absolutely, done in the rear end. Because you can see with this example, okay, this strategy was at an all-time high. Like I said, it had been performing fantastic since I'd set it live. I think I set it live somewhere around here in June or July. So it had been, probably made 1% on my master account. Considering my master account was up 6% at the peak, it's been a pretty significant player as part of the portfolio. That all got wiped out with one trade. Okay, so that cannot happen again, because if that happens again, guess what? The risk-adjusted metrics of this strategy are now completely different to when I built it, when I first went through my tests, and when I tried to break the system initially. So there's two different issues that we got to try and solve there. First issue, like I said, was the swap fee issue. So what I thought initially was, okay, well, silver is an appreciating asset, right? It's a precious metal. It's not designed to go up in the same way that indices and equities are. They are specifically designed to grow with the economy as the economy expands, as more money flows through, as inflation comes through. US indices, UK indices, all of these sorts of assets are designed to increase in value. Okay, just by kind of mathematics. Precious metals work similarly, but not 100%, right? There's still the idea of a precious metal is, again, it's designed to increase, or ideologically, it's going to increase in value over a long horizon. Reason being is because A, they have real world use cases, but B, they're also seen as safe haven assets. It's something tangible that you can get your hands on, right? Now, that means that if inflation continues over the next 10 to 100 years, then precious metals should also increase, as it's a commodity. It's something that you can own, buy, keep, hold. So that got me thinking, okay, should we treat short trades and long trades completely different? Because I have to pay to short silver. Okay, with this strategy, if I'm shorting, I have to pay to do that. Every night when there's a swap fee, I'm the one paying out my own pocket, out my own profits to hold that trade. That doesn't make sense, especially when you're trading an asset that is likely to increase in value over time. So it got me thinking, okay, well, on the flip side, if it's likely to increase in value over time, why am I cutting the trades at 0.45 risk to reward? And I can tell you why, because on the short side, it made sense. And so what I decided to do was have a play around with different things. I removed the targets completely and decided to implement a time-based stop instead, or a time-based exit mechanism. That solved both issues. well, it solved the swap issue 100%. So it solved the swap issue 100% because I'm now no longer going to be paying swap fees on this strategy. Initially, I did implement it for shorts only. So, close shorts out on the same day at a specific time. I think I set it to 8 p.m. UK time to close the trades, or 9 p.m. UK time to close the trades, and then leave long positions to continue trading. Results didn't look, they were too unstable. It was too overfit for that kind of idea. So I just decided, okay, let's close all trades out on the same day. Now, what I found really interesting was the performance hasn't really changed. So you can see here where you don't code. I can code, but I'd rather not when it comes to trading. I'll show you a couple of platforms in a moment that help you to build strategies without having to code. Tail, could you explain that again? Sorry, with the time variable. Okay, so essentially what I've done, and I'll show you the platform now. So this is a platform called FX Dreamer. It's what I use to build my strategies. So it's a no-code platform. I say it's a no-code platform. It's a building block platform. So I can search for different variables. So let's say once per bar. So once per bar, I want to check for this specific condition where we go moving average 5 crosses above moving average 20. Okay, update that, and then I can go buy now. It's a very simple example, and obviously I don't recommend that as a strategy, but you can risk a balance. So then we set a variable for the risk, so I can change that when I'm doing some tests. I'm giving, like, this is it's very complex. It's very hard to get used to. But I've been using this now for 8 or 9 months or so. So I know how to use the platform. There's plenty of videos on YouTube. There's plenty of tutorials which will go through all of these sort of condition blocks, what they all do. But I kind of went through it and just tested a load of things out and kind of found it for myself, basically. So initially, what I've added today was 2 seconds, guys. I've just got to reply to a message. So initially what I've added is once per day, and I've set that to be at a specific time that I can choose, which I think for that system, take a look. So that's 9 p.m. So that's 7 p.m. UK time. So it'll close the trades at 7 p.m. UK time with the closed positions, either buys or sells. So what this logic does is once per day, if there's any open positions, it's going to close them at 7 p.m. or 9 p.m. MetaTrader terminal time, which translates to 7 p.m. UK time. Another thing that I added in, and this was to combat, where are we? Notion. This was to combat the spread issue. So the D1 breakout. This was to combat this. So we've solved this now. Okay, that's gone. That's no longer an issue. We've solved the carry and the swaps. That's no longer an issue. Now I needed to solve this. Okay, so I simply built in a spread filter, which is here. So you can see a spread filter. So current spread must be lower than a fixed spread amount. So my variable is a fixed spread. My variable is in there. So if we load up MetaTrader again, you can see that brings it up here, spread in points. Now I put 25 point spread. Silver at the moment is 30. So maybe I need to increase that because I'm asking for kind of perfect conditions on silver. Now, what that means is it's not going to set a pending order if silver spread is too high, because that's what got me last time. Set the order, pinged it straight away, hit stop loss straight away. So it was kind of like a boom, 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 all done within a millisecond. The open and close time of the trades or the deals was the exact same time. So this gets rid of that issue. Now, if we look at this equity curve, looks completely different, right? And yes, it does lose more. So before we had an 80% or a 79% win rate overall. You can see here 79.57% on long trades, 79% on short trades. So it was winning more often than not. Okay. Now we're looking at a overall of 47.8%. Okay. So it's pretty much 50-50. And I'll explain why I'm happy with that in a moment. But you can see I've solved both issues. There's no trade down here where we get blasted by carry, and there's no trade here where we get blasted by spread. Okay, fantastic. Now we have to look at the performance. Have I drastically changed the performance? Well, overall, the performance for the same 8-year period on the new setup with these filters in is 6%. Okay, over an 8-year period. So you're looking 0.7, 0.8% per year with a max drawdown of 1%. Okay, if we take a look at the previous, we had a 1% drawdown again, 0.98, so slightly lower with a 5.6% return. So what I've actually done by adding these filters in is not only safeguard myself from future issues to do with spread and swap fees, but I've also increased the performance of the strategy. Hypothetically, again, this is all back testing, right? And, you know, it now needs to go through a period of live testing it. Luckily, it's only 1 out of 27 strategies. So I'm happy to walk forward test and test it live. If it doesn't perform the way it should, the way that the back tests perform, then yes, I can remove it from the portfolio. However, because my systems are so simple, usually I don't run into too many issues like that. Some basic metrics, although I'm not a massive fan because this Sharpe ratio is like incredibly out of whack. So I don't really, I note it down, but I don't put too much weighting on it because 9.83 Sharpe is ridiculous and it's kind of silly. There must be a miscalculation in the way that MetaTrader calculates that. But the profit factor is basically the sum of your total wins or total gains, take away the sum of your total losses. So you can't really, like MetaTrader doesn't really give a false figure here. Anything above 1.5, I'm super happy with, and I don't really see a reason to change anything unless there's an issue with execution. So less strategy specific. I've just realized my face is in the way of some of these metrics. So when I'm pointing over here, I've just realized you might not be able to see. So I apologize for that. I'll be a bit more aware of that. Now, in fact, maybe if I can I change or oh no, that didn't look right. Okay, I'll just leave it as is for now. There we go. That's probably better. You probably see a little bit more now. Although I've now cut off Darwinex TV at the top, but who cares? But you can see the profit factor is 1.72, which is it's not way higher, but it's higher than my threshold of 1.5. I do have strategies under 1.5 in the portfolio if the return is decent enough and other metrics are okay, and if it's robust enough. So now that I've made these changes, what I want to do is come into MetaTrader. I don't trust MetaTrader's backtesting 100%. Same as I don't trust TradingView's backtesting 100%. What I do the first time when I test the strategy is I click visual mode. So I watch it in visual mode. I make sure that it's trading the way that I want it to trade. Then once I've can say, yeah, I'm happy with that. I'm happy that it's trading the way it should. Has that just changed? Oh no, it was sorry. I was looking at this screenshot. Once I'm happy with the fact that it's trading the way it should trade, then I won't use the visual mode anymore, as long as I know that the logic's correct, and I'll just run the tests and go through them faster. What I then do is come onto here and I save the report. So if I save the HTML report here, let's go into where to save them. Where have I saved all these reports? Desktop. There we go, desktop. So XAQP reoptimized. So now I'm going to save this report. So this is ZAG USD. It's on the D1 time frame, and it is the breakout strategy. Okay, so save that here, and you can see it's now saved the report from MetaTrader. Okay, so we've got all the results. We've got the same equity curve, breaks it down a little bit more. So you can see a lot of the return is done within a specific hour of the day. The reason for that is because that's where we're shutting off the trades. That's where we close the position. So we expect that. That's not an outlier in the data, okay? Yes, you do have to purchase FX Streamer. I think per month it costs like £22. So it is only, it's not an expensive platform. There is also Perfectus AI, which is owned by one of our Darwins. So it looks a little bit nicer. Hasn't been around for as long. I have used it, but all of my strategies have been built on FX Streamer. This is Perfectus AI, works pretty much exactly the same. It does have a free tier as well, so you can play around with it and get used to it. I'm just used to FX Streamer at this point. That is owned by, I said Darwin. PYE, is it? Yeah, Perfectus. So this Darwin, that is their software. That's their platform. So this is a guy called Max. I've interviewed him. Should be coming out maybe in next month. But yeah, fantastic trader. Works out of the Amsterdam Stock Exchange. So he's got a super cool background. When I was on the interview with him, he tried to work with FX Streamer in the past, but they weren't interested. So instead, he went and built Perfectus AI, which is his own version. Conceptually, same thing, does the same stuff. You can build strategies. There's no code. You don't have to code anything for it. But yeah, you can choose between which platforms you want to trade with or want to build with. So here you can see it's got a breakdown of all the deals, the orders, the trades. And go to the bottom, and then a breakdown at the bottom. Cool. So now we know. Okay, is that an issue? Swap fee. Okay. So why is that? I think I know why that might be. Once per day. That's interesting. So there's a couple of trades with negative swaps, which there shouldn't be any. I'm wondering if there's a couple of trades that have been held due to a bank holiday and the market's closing earlier than possible. What I'm going to have to do is take a look at these. So 12th of July, 28th of June. I'm going to have to take a look at those specific examples and find out why that happened, because 2 out of 159 trades haven't closed when they should have done. Okay, so what I need to do is check on those days why that happened. 12th of, yeah, super strange. But anyway, that's a me problem. I'm gonna have to figure that out and find out why. But okay, now that we've got this report, I'm gonna close this down. I'm gonna open up Quant Analyzer. This is a report of my portfolio over the past 8 years. So you can see the monthly breakdowns here. So yearly, we're not doing crazy figures. This is at master level. So of course my Darwinex is scaled up quite significantly. This 5%, 11%, 21%, 8%, 21%, 14, 19, and 10% year to date. Okay, I haven't updated some of the reports in here, so this September figure is incorrect, and that year to date figure is incorrect because all of my previous reports were up to August. So I've only got 4 reports that are updated from September onwards. Hence why September's a negative month. Because if we look at my Darwin, September was a fantastic month. Okay, so that's just due to me not updating the reports yet. Looks like things are moving as well. Nice. Okay, so what I'm going to do now is go into Quant Analyzer, which I only have the free version of this as well. You can get a free license. You can't use all of the features within the platform, but you can use enough. So especially if you're just starting out in building systems and building a portfolio, this should be enough just to get you where you need to be, sort of thing. So I'm going to load the report, bring that over here. And the strategy report that we're looking at is silver D1 breakout. So I'm going to load this. It had an initial deposit of 100,000 because that's what we tested it with. I'm going to click continue. And then you see it comes up with a 6% return, which is correct based on the MetaTrader report. Okay, so you can see here Sharpe ratio 0.2. So that's why I completely ignore the Sharpe ratios of MetaTrader, but also Sharpe ratio 0.2. I don't think that's correct either. Could be, who knows? Profit factor 1.61. That's correct based on the MetaTrader backtest as well. Drawdown is slightly lower on here. So the way that quant analyzers analyze the trades gives us a smaller drawdown. Because I don't have trades where they don't have a stop loss, usually your equity and your balance-based drawdown are virtually similar. There may be a slight discrepancy of like 0.1%, 0.2% at a stretch, but there's never going to be a massive difference. If you run trades without stops, then yes, there's like the grid trades, for example, there's going to be a massive difference between your balance-based drawdown and your equity-based drawdown. But if every strategy has a stop on the target, you shouldn't have an issue with a discrepancy there. Okay, so you can see yearly average profit 1.77%. That's surely not right. Okay, yearly average. The CAGR is 0.74. So on average per year, we're generating 0.74% return to run this strategy with a maximum drawdown of 0.86, let's say 1%. Okay, so we know within a 1% buffer, we're going to be making 0.74% for the rest of time running this strategy. Of course, that's a very blanket way of looking at it, and I'm not silly enough to think that this strategy may not work in the future. And that's a bridge that we'll have to cross when we come to it. However, this is the assumption that I'm working on moving forward. 1% max drawdown for the system. If it breaches that, I'll then have to review it and then take a look at it and go, okay, well, what's happened here? Has the strategy stopped working? Has it just made a new drawdown? Do we need to increase the performance somehow? These are all questions that I'll have at the time, but this started as just a review. But we know 0.74% on average yearly return. Okay, fantastic. I'm happy with that. Now, taking a look at the year-to-date drawdowns. So it's had 2 losing years. So we lost 0.06% in 2018 and lost 0.25% in 2023. Tal says, I've never used strategy testers outside of MT5s. Yeah, I mean, MT5 does the job, right? But I like to take a look. I like to have kind of second eyes on it. So I go through all of my reports and everything with a fine tooth comb. But no matter how much you back test the strategy, nothing compares to running it live, because you're getting real-time execution, real-time mistakes where you have to analyze what happened and how you can improve it moving forward. Okay, what I want to do now is I want to run a Monte Carlo test on this. So I'll come over to the sidebar, click Monte Carlo analysis. Initially, I'm going to do it with 100 simulations. So if I run 100 simulations, bring up the Monte Carlo chart, you can see there's actually quite a bit of discrepancy here, probably due to there being, a fairly low amount of trades over that 8-year period. Now, they all point up and to the right, which is fantastic. You can run multiple simulations, so it's going to randomize the outcomes at each time, which is what a Monte Carlo test does. So essentially, if you're unsure of what a Monte Carlo test is, it will randomize the outcomes of your trade by X amount of periods that you decide. So 100 is giving us 100 different ways that the strategy could have performed over the past 8 years, effectively, or 8.5 years, I'm going to say. If I wanted to run it with more, we could do 500. I'm not going to do it at 1,000 because I've got quite a few things open and it might crash my PC. Just a kid scribbled. Yeah, it does look like a kid's just got a bunch of pens and ran across the page. Now, again, even with 1,000 simulations, you can see that there's only a few outliers down here where there's only a few strategies or a few outcomes. Sorry, this is 500, not 1,000. There's only a few instances out of those 500 where we stayed in stagnation and drawdown longer than the mean. Same with the upside. There's only a few instances where the strategy performed above the mean. I'm happy with that, okay? Because the majority of the volume, the majority of the performance was confined within this window here, or this band, if you will. So now what we'll do is we'll look at the results with confidence levels. And essentially what we want to do here is we want to make sure that even with a 95% confidence level, we know that our strategy isn't going to blow up with randomized outcomes. So the statistics that we have, as you can see on this top line with the original, so we made a 6.05% return and we had a maximum drawdown of 0.86%. I still think the drawdown should be slightly higher. I think it should be about 1%, but let's just work with this for now. Now, we can say with a 95% confidence level that with the most randomized outcomes, we would still generate 5.5% return. As you can see here, 95% confidence level, net profit 5.58% with a maximum drawdown of 1.9%. Now, that's the only sticking point for me, is that it doubles the max drawdown. I'm actually okay with that on a strategy by strategy basis because I also Monte Carlo test the portfolio, so I know the portfolio's worst drawdowns as well. But essentially, what we don't want here is a completely different outcome from the original. So if this 95% confidence level was a 2% return with a 3% drawdown, I would say, that's slightly, well, it's not slightly, it's a massively different result to what we got in our initial test. So basically, we've overfitted the strategy to what we wanted to see on the chart or what we know is there in the chart, or the kind of the conditions that we've had over the testing period. Whereas when we randomize the outcomes, when we say, well, that trade should have gone there, blah, 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 then, sorry, somebody's just messaged me. But essentially what we don't want to see is that the strategy blows up with random outcomes, because that shows us it's not as robust as when there's small amounts of variance. Like there's not too much variance here. It doubles the max drawdown, which I'm a little bit concerned about, but nothing that's too concerning, because the return only drops 0.5%. So I'm not overly concerned about that. It's just something that I might look into at a later date. So then I save the screenshots of these, which I'm actually going to do. I'll actually do it now while we're doing it, because as soon as I get off this, it will remove it. So let's remove the old Monte Carlo. Take a screenshot of this. I take evidence of everything that I do, because when you're running a portfolio of multiple strategies, especially when you get to, 15, 20, 25, or even 27, like I have, sometimes you forget certain elements of certain strategies, why things happen, how things happen. And so having this, where everything is in one place, where I can come on here and I can see all of the strategy details, and it's enough to jog your memory so that you can run the same tests again. So what I'm going to do, I am going to keep these here for now, just because I want to keep them as a point of reference, because I haven't changed the strategy on the actual portfolio yet. It's still turned off, which I'll probably do tomorrow, because I don't have much time this afternoon or this evening. Where are we? We need MetaTrader. So I'm going to take a screenshot of this. Okay, here you can see why it was saying 0.86% drawdown, because you can see the balance-based drawdown was 0.86%. However, we must have been in a trade that went offside slightly and then recovered, because the equity drawdown is, 0.15% more. So it must have gone into a bit of drawdown, and then it worked out of the positional drawdown for that trade, which is why the equity drawdown is slightly higher, which is okay. So Notion, let's bring that over here. I'm also going to go whoops, no. Okay, so I'm just going to separate them so I know which one's which. Graph. Oh, my love. Okay, new, And now I also want to save the settings, because if I come back and test the system again, I want to know exactly what I was working with. So I want to know which settings to put in and which settings to change if I need to change anything. Okay, so we have the settings that give this result, that give these details, that give this Monte Carlo. Fantastic. Like I say, I will remove these at some point, but I'm just keeping them for now. Now what I want to do is see how that's affected the portfolio. Okay, so if we jump back to portfolio a second, I'll bring up the latest XAQP, which is 112.84% return with a drawdown of 1.61%. Again, that's balance-based drawdown, so there will be slightly higher drawdown, I believe, probably up to 2%. This has dropped dramatically since I've added a spread filter into a few of my strategies. Whether it stays at this, I don't know. We're looking at a 9.9% average yearly return with a 1.61% drawdown. So this might look crazy low, but when you figure that the portfolio does an average 9.9% growth, it's actually it's not crazy low. The problem with that is I get scaled up loads on Darwinex when I run it on prop accounts, and when I run it on other accounts as well, where I have my own capital and stuff, I also scale it up. So I don't ever run it at this. This is for me to be able to run and not panic seeing bigger numbers. Okay. So when I'm watching the master account and it loses $30 or $60 or $100, I'm not too bothered. Okay. Because the numbers that we're playing with are very, very small. When I'm copying it to a different account, I will scale up the risk because I don't have to look at those numbers. I don't have to care about how it's doing. But okay, so this is with all 27 strategies, 4 or 5 of which are updated, as you can see on the strategy breakdown here. So 1, 2, 3, 4, 5. 5 systems have been added: the spread filter in, the slippage filter, and the UJ SMA pullback has been slightly optimized. Nothing crazy. I've just done some slight amendments to it. And that is now reflected in this. So in doing that, I've reduced the drawdown quite significantly from 2.5% to 1.61%, which is fantastic. And I know exactly the reason why. It's because of the changes that I made to the UJ SMA pullback. That was heavily correlated with some of the other strategies, hence why my drawdown was at 2.5%. So now that I've reduced the drawdown, happy days. I've also increased the total return over the 8.5-year period from 109% to 112, which is fantastic. I'm happy with that. It's an extra 0.3% per year. Absolutely, ecstatic. Now what I need to do is create the new portfolio with the updated results. And again, I just want to reiterate, this is all hypothetical. This is all backtest performance. These are backtest reports. I compare them to live reports. So, what my trades have actually done. And again, I'm reiterating a point, but there's usually very little discrepancy because each individual strategy is super, super simple. It's very difficult to overfit them, but it's actually not difficult to overfit them. But I put a lot of work into not overfitting them for the specific reason that I want my live portfolio to operate as close to what I know it should from the back test and from my walk forward testing. So now we need to redo this. So let's find the strategy that we are updating, which is XAG breakout D1. So we're going to remove this strategy. And now we're going to load. Oh no, it's already loaded, isn't it? Yeah. XAG D1 breakout. So it's already loaded. It's in there. I forgot we've already done all that. Oops. So now what I'm going to do is bung them all together, create portfolio. Now you can see I've added a new one. So this is just every time that I've reviewed the strategy and updated what I need to update, whether it was the spread filter and slippage filter or any adjustments to the actual system, I just create a new portfolio just so I can see the difference in performance. Now we go XAQP6. You can see it's only showing a 4% return. Why is it doing that? Well, here's the tip. If you go to settings, you can see what it's done is it's added $100,000 to the initial deposit per system. Because I have 27 strategies, it's showing an initial deposit of 2.7 million. So the same returns are all happening, but it's thinking that it's happened on 2.7 million, which it hasn't. So I need to change that to 100,000, recompute stats, and then go to overview. So fantastic. Okay, it's given us an extra percentage return over the 8.5-year period, slightly increasing the CAGR. And it has also slightly increased the drawdown, but I'm happy with that. 1.67% drawdown, I am totally okay with. Anything below 3%, I'm super, super happy with. And now you can see the September returns starting to come in. Okay, like I said, I had a fantastic September. This silver strategy before it kind of blew up with a spread this month. I say blew up, it just had a couple of big losing trades. But it had a fantastic month in September, and it's brought a year-to-date return to almost 12.5%. So that has been a fantastic change that I've made on paper. Again, reiterating the point, this is all hypothetical. I haven't tested this live yet. The strategy has been tested live. It's been broken live. I've done everything that I can to break the system, and I've made a few different refinements and a few tweaks to build a robustness out of the system. But I think the silver strategy is a good example because I've actually changed quite a lot. Whereas a lot of the other ones, I didn't change too much. So for example, this S&P, I mean, you guys, the guys that come to this session often will know I talk about this strategy a lot. This is super simple to the point where I kind of feel stupid saying it, but it's a one-to-one risk to reward strategy. This is the equity curve. It's also done a fantastic job since I set it live back in, I think this was one of the first strategies I built in May or June. So we're probably looking around this point. So you can see it's had a really good run over the past few months. If the Friday closes bearish on the S&P 500, it will buy the cash open on a Sunday evening. Simple as that. And it will trade it for a one-to-one risk to reward. It will have the stop at Friday's low. So Friday was a bearish candle. It will have the stop at Friday's low. In fact, let me bring up trading view so I can show you. And it will trade it with a one-to-one risk to reward. So I hope this session's useful, by the way. I just realized I've just been chatting waffle for a long time now, and I hope you guys are finding some value in this. Are you happy with Darwinex 0 for your platform instead of Darwinex? I'm extremely happy, and the main reason for that is because to post margin for my portfolio, you're going to need roughly the risk level I'm running at. You probably need 50K minimum. Now, I would rather just run it on Darwinex 0 and not have to put 50K into a brokerage account to test it. Maybe down the line, I will migrate, but I don't really feel the need to because you can attract AUM through DarwinIA through investors. I also have a close network of investors in my circle as well, so I can always raise capital if I need to. So I don't feel like I need to trade, you know, or risk 50K in my own capital, at least at this point. Maybe in a year, maybe it's different. And I also have prop firms as well. So, so that Friday wasn't bearish. Okay. I actually closed out of that one. I cut that trade because I didn't want to be in it. Because that would have been, I mean, it would have worked, I suppose. So the logic is this. If Friday is bearish, it will buy the cash open with a stop at Friday's low, and it will trade that for a one-to-one risk to reward. Now, I don't usually meddle in my strategies, and you can see this would have almost hit stop and then run to target. The only reason I didn't stay in this trade was because of that massive candle on Friday. I didn't feel comfortable holding it. I was in a few other positions at the time, and I thought I'd rather just be out of the market. It went on hit target, so what do you know? I should have listened to my strategy. That Friday was bullish. Okay, here we are. Another example. So Friday closed red. I mean, that actually hit target somehow. Again, I'm just using I don't even know what feed this is, but that hit target because I was in that trade. Friday again, same thing here. So bought the cash open, which is there. Stop at Friday's low, and then one-to-one risk to reward like that. So that's an example of a super simple strategy that I have. And funnily enough, that system came with it came from a conversation that I had with a friend of mine. Okay, so a friend of mine I was talking to about strategies, and we were talking about building a portfolio, and he said something so throwaway to me. He just said, have you ever noticed that when a Friday close is bearish on the S&P 500, then usually it rallies on a Monday? And I was like, is that true though? Like, are you just saying that, or is that actually the case? And so I thought, well, let's test it. So we was on a call. I put this system together. It took me 10 minutes to build the system. We ran a test, and I was like, actually, there might be some truth in what you're saying here. You know, 6 months later, it's a staple part of my portfolio. It's been pretty much on a tear since this point, which is September 2022. It's not had, I think, 2 losing trades at most. Yeah, whereas historically we've had like 4 or 5 losing trades there and there and there. But since September 2022, the strategy's just been on an absolute tear, which is fantastic. The only thing I've changed to this, the only thing that I added in was the spread filter. So what I didn't want to happen, mainly for safeguarding myself. Okay, it looks like the Nasdaq's dumping now, unfortunately. All I wanted to do was safeguard myself from that one time where spread blows out. I didn't want it to execute. So again, with the silver strategy, it wasn't like I was trying to reduce the amount of trades or change the like completely change the logic behind the system, but I was looking for those unicorn trades, those one trades that happen every year, every 5 years, every 10 years, that wipe out 2, 3, 5 years or 2, 3, 6 months of performance. Those are the trades I'm trying to tackle. And so with that logic in mind, I'm trying to be proactive with the other strategies. The S&P system, the S&P strategy, has never shown me any worrying signs of anything going wrong. However, I don't want to find out the hard way. I don't want to be caught up in a move and go, damn, I wish I'd have had a spread filter on that. So all I've incorporated with that is a filter that when it's going to execute on the Sunday night on the cash open, it'll check the spread. If the spread is lower than what I've set it in the strategy, then it won't then it will execute. If the spread is higher, it won't go near the trade. I don't care whether I get stopped out. I don't care whether I hit target. I'm agnostic. It doesn't bother me. But what I don't want to do is, based on my own laziness, to not go in and proactively make these changes and these adjustments. I don't want to then get burnt on the back end and say, well, I should have learned from the trades that I had in silver, but I didn't. And I didn't make I didn't make an adjustment, but I did learn from what happened on silver. And therefore, proactively, I'm making the necessary adjustments. And so that's one of the changes that I made on the S&P system. But I haven't changed anything from a strategy perspective. I haven't altered the logic. I haven't changed what it looks for or how it executes. I've just adjusted slightly what it looks for when it executes. So now it looks for the criteria to get in the trade, but it also checks, okay, are conditions optimal right now to get in the market? Because you might go 6 months, 2 years, 5 years. You might even go 10 years with having okay conditions ready for execution. And then that one trade, like I say, can wipe out years of data or wipe out years of gains. And that's not what I want. Okay, so making these proactive adjustments just constantly means that the portfolio is evolving and also that I'm evolving as a trader. The markets adapt, markets evolve. You have to make sure that you do too. It's even more important if you are a discretionary trader and you trade one system. For example, if you see XYZ, you go and do ABC. It's even more important at that point that you recognize that markets change, you recognize that markets adapt, and that you allow yourself to grow and to adapt with those markets, because a strategy that worked 5 or 10 years ago might not work in today's market, and it's up to you as the trader to find that out. Luckily, I feel quite comfortable that I have 27 systems, and for all of them to stop working tomorrow is very, very unlikely. Could happen, of course, and I'm prepared for that. But if 1 or 2 strategies stop working, that's okay. I'm happy to take the hit. I'm happy to remove them and to, replace them with better strategies or make the necessary adjustments that we need to make. But that's fine. I'm happy to do that, and it's not going to damage the portfolio long term. For example, I've turned off the 2 silver strategies. It doesn't bother me. Okay, because I know that the performance will be there without those strategies. But you can't really, if you're trading with one system or one strategy, you can't really just turn it off. Otherwise, you don't make any money. Okay, so let's close this down because I'm going to call it the end of the session momentarily. Oh, still got loads of these open. So what have we got here? So currently in NASDAQ longs, like I said, and my dollar yen trades have literally this second just closed because they also close at 6 p.m. So fantastic, happy days. Okay, guys. I'm that circle. Yeah, she's at the bottom of the stairs, looking out, guarding the street as she usually does. Okay. I hope that session was useful for you. It was a little bit different to anything that we've done before. I am more than happy to do, more of these interactive sessions in future, because I enjoy doing it. B, I like giving you guys value if you haven't, explored these platforms or done any of this sort of stuff before, because I know it can be daunting to do so. But I also think it makes a nice change from just looking at Darwin's and strategy development stuff, because this is kind of the other side of that. This is the building the strategies and keeping them, maintaining them, optimizing them. So yeah, and currently we've gone up 60 spots today. So we've cracked the top 100 again, tail. We're back at 87th. At 9,091 traders, which is fantastic. I was at like 100 and what was I when we was on a call earlier? 130, 120, 130. So jumped up the leaderboard today, which is fantastic. But it's about more than that. I want to be open to gold. I want to be open to investors. January it will be open to the Darwinex exchange, which I'm super, super excited about. That is my goal. I'm not even bothered about anything in the meantime. I'm so focused on the end goal of getting, having the gold badge. And even for you guys watching this now, like I'm just some random dude who's been trading for years and years and years, talking to you all. At least when I have DarwinIA Gold, I mean, 87 out of 9,091 is still pretty feels good to say. But when it says participating in DarwinIA Gold, there's no question you guys like know that I'm not some scammer up here, just feeding you stupid information. Anyway, I'm rambling because it's getting late and I'm tired. And now I know I've got to go and deal with the little ones. So guys, it's been an absolute pleasure as always. Taylor is currently comparing our Darwins, which to me, there's no comparison, dude. You'll never catch up. Are you actually 88th? Don't lie. You're actually a position behind. Let's have a look. XAQP, where are we? Oh, you are as well? Are you jammy bugger? You followed me up the leaderboard. Both Taylor and I was like in the 120s, 130s today, and we both jumped up together. And currently in the lead by 1 place on the leaderboard. Yeah, this is golden. When's the next update? In an hour. Let's see what happens in an hour, because I've just closed 2 profitable trades as well. So maybe I'll jump up slightly more. Whilst it's on my mind as well, if you guys have seen it, you might have seen the rating goes over 100. This is just basically because we've added the DarwinIA bonus, and this trader has a 3-point bonus based on the length of their track record. Hence why it's pushed them above 100. I did report it back to the team, but it's nothing to be concerned about. So I don't think we'll be making a change to that. Anyway, guys, this is the longest sign off ever. So it's been a pleasure talking to you all. I hope you will all enjoy this session, and feel free to watch it back if you want to go over some of the things that we discussed in today's session. Peace and love, gang. I hope you have a fantastic rest of your morning, afternoon, or evening, depending on where you are in the world. And I will see you tomorrow for our next session at 4 p.m. UK time. Peace out, guys. Have a good one.